Hey everyone, this is June from Turning Point Life Investment. Now, this video isn't necessarily an analysis on this particular stock, but it's actually caught my eye simply because, well, I want to show you guys a classic bullish reversal pattern. What we're looking at right here is what's called a morning star. Now, for those of you who noticed this pattern, this is almost like a very textbook morning star pattern. It doesn't get any more beautiful than this. A morning star consists of three candles. You have the first candle being a down candle or a dark candlestick, followed by a gap down doji or at least a small bodied candlestick, and then finish with a gap up white candlestick. Since this is a bullish reversal pattern, it means that there's a pretty high chance that this current downtrend might be reversing. Okay, so high chance doesn't necessarily mean that it will. The other scenario is that the current downtrend is losing strength and we can just side trend for a while. That both outcomes are equally possible. So let's say you see this pattern on another stock that you're keeping an eye on. How do you actually trade this stock? Because I mean, after all, isn't that what it's all about? I mean, you're not here just to recognize patterns, right? You're here to actually trade these patterns. So I'm going to use this stock as an example. The main thing you want to take away from is that $18 here is now acting as support because that is the lowest point of this pattern. So if prices break underneath 18, this tells us that the Morningstar did not do a very good job at reversing this trend. So as far as placing stop, putting it right underneath $18 would be a rather safe place to put a stop. As far as entry, what you want to see is a bullish follow through or confirmation. For me, I would like to see buyers come in and trade above this white candlestick. So we'll just say for this stock, it will be above $20, and that would be a relatively safe entry. And as far as choosing targets, that really depends on you. I know people have different ways of choosing targets. For me, I always like to pick the next resistance level. You can see here that the 20-day moving averages has been acting as pretty strong resistance. So the next time it comes up to meet it, I would suspect that there will be some selling going on there. The next possible target is up here around 23. So you can always have multiple targets. You don't have to always sell everything at one level. You can always scale out, which is what I always recommend. Just kind of scale in and scale out of your positions. Now, a reversal pattern is more significant if other indicators are involved. Well, first of all, there must be an established downtrend in order for a true reversal pattern to work. Because if you see this Morningstar pattern, let's say in a side trend or even in an uptrend, it doesn't really hold as much significance. So the context of where you see the candlestick is probably the most important thing, right? Not all candlestick patterns are created the same. The other things are, for example, moving averages. If it's really stretched out from a moving average, that adds to the significance. Things as well as being oversold, or if you see MACD divergence, which is what we're seeing here. So these are things that point towards weakness, towards the downside. So this bullish reversal pattern has more significance as opposed to others that do not have a backup, so to speak. So this is just one of the many bullish reversal candlesticks out there. For me, I always like to keep it to the more common, more simple ones, such as this Morningstar, bullish engulfs, hammers. That's about it. And it works the same. This concept works the same for the bearish reversals, such as shooting stars, evening stars. The only difference is that you just reverse your entries and exit.